I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, ARK ETFs plunge for a fifth day amid the tech sell-off. Cathie Wood having her worst run in a year. Tesla, Square, Roku, and other large holdings are tumbling. I will speak to Cathie Wood herself about her strategy going forward. Plus, the global cyber crisis facing Microsoft. An attack on its Exchange email software is sending hackers racing to infect as many victims as possible before companies can secure their systems. We're speaking with FCC Acting Chair Jessica Rosenworcel later this hour. And the Amazon-backed self-driving car company Zoox, they say the self-driving revolution is coming, but when will it happen? We'll speak to the company's CEO. We've got a blockbuster lineup this International Women's Day. We'll also be speaking with Google.org's Jacqueline Fuller about the jobs picture for women and what to expect in the coming year. But first, it was a rough day on Wall Street. The NASDAQ 100 tumbling, ending 11% below its all-time high a month ago. For more on the day, I want to bring in our Ed Ludlow. Ed, we got some new vaccination guidelines, but markets not necessarily responding the way some had hoped.
Yeah, basically investors moving money out of big tech, out of tech stocks, and into companies who are more closely aligned with the fortunes of the economy as the vaccine rollout picks up pace, as there's more hope for stimulus and the reopening of the economy. You're seeing that play out in the so-called rotation to value. The S&P 500 down 0.5%, but really the big drag here is tech. The NASDAQ 100 down 2.9% on the day. The NYSE FANG Plus Index, which is that basket of big cap tech stocks, down more than 5%, and semiconductors not spared either, down 5.4%. In terms of where that leaves us, Emily, you nailed it. The NASDAQ 100 down 11% since its February 12th peak, which of course is a technical correction. And remember also what's at play here is investors are jittery about stretch valuations for tech stocks as we see yields continue to rise. I did want to look at some of the specific movers today as well. Emily, GameStop mania is back. Well, sort of. Up 40% on the day. Not necessarily Reddit traders driving that, but news that the company has tapped Chewy.com founder and activist investor Ryan Cohen to help them actually move into e-commerce. You remember the whole point of GameStop is that it's still a brick and mortar business. Other names that continue to be stretched, Apple down 4%, approaching its 200-day moving average, officially in a bear market from its January high. And then Tesla. Tesla continues that terrible run with Nvidia, one of the biggest points decliners on the NASDAQ 100 as well.
Well, and on the subject of Tesla, we're going to talk to ARK's Cathie Wood in a moment, but walk us through how her ETFs performed on the day.
Yeah, you know, the ARK Innovation ETF having its worst run of weekly decline since a year ago when the pandemic first unfolded. And as you say, really, this is about names like Tesla, which are the biggest holdings within that ETF. You can see there it's down 30%, again, from a Feb 12 peak, really closely aligned with the NASDAQ 100, which is pretty interesting. But come with me into my Bloomberg and look at this chart, because that's not the whole picture. Yes, the ETF is down 11% year to date, but it's up more than 200% since its March 2020 low, which isn't bad on any measure. And then you look at those green bars, the intense inflows that the ETF saw between October and the end of February. That performance, that bad performance of late in terms of price declines came on the back of a historic winning streak, which attracted billions of dollars of investment and inflows. Plenty of those investors appear to be sticking around, and history has shown that those that bet against Cathie Wood don't tend to do particularly well. Emily.
All right, Ed, thank you so much. Let's continue writing those history books with more on ARK's ETF performance and the volatility the market is seeing right now. We've got Cathie Wood herself with us, founder and CIO of ARK Investment Management. Cathie, it's been a while. Good to have you back with us. Clearly, you are feeling a fresh round of pain right now. What is your strategy? What are you buying? What are you selling?
Well, we keep our eye on the prize. We have a 5-year time horizon, and actually, when we go through a route like this, first of all, the rotation now is happening very quickly. It started off slowly and is happening quickly. So I'm happy that the market is broadening out. This was the case in late 16 as well. Value took off and left growth behind. And whenever I see that happen, I say, okay, this bull market has broadened out. This is good news. What we do during these periods is concentrate our portfolios towards our highest conviction names. And so that's what we're doing. We had extended the number of names in the portfolio from the low to mid 30s at the bottom of the coronavirus. And now we're at roughly 55 for our flagship fund. And we are starting to sell the more liquid names and buy some of the more pure play names. So the more liquid names are either more mature, the Facebooks, the Apples, and so forth, or they are participating in innovation, but they're not pure plays. So Regeneron, Novartis, and so forth. So more liquid in order to have cash-like instruments to use at a time like now and move, again, concentrate towards our highest conviction names.
So let's talk about Tesla then. You said that you were only going to buy the dip. Are you going to continue to buy the Tesla dip now that it's dipping even lower?
Yes, we can buy a stock up to 10% of our portfolios. And that's certainly in the ETFs. We report our holdings at the end of every day, so anyone can see that. And yes, we have been building whenever we can. Now, we built up to 10% last week, so the stock behaved in line with our portfolio. So again, we can't buy anymore here. If it were to deteriorate at a rate beyond that of our other portfolios, so drop below that 10%, we would then have the latitude to buy more, of course.
Now, you've said you're going to put out a new Tesla price target. The market is anxiously waiting for that. When are we going to see that? Can you give us an idea of what the target will be?
It's going to be I'm going to say a couple of weeks. We're getting compliance is helping us cross our T's, dot our I's, and do everything we should do before we send it out. But the two things that have happened to Tesla since our last projections are, one, it has increased its market share. When we put out our original $4,000 price target, so the equivalent of $800 now, we thought that Tesla's share would drop from 17%, this is share of the electric vehicle market, global electric vehicle market, from 17% then to 11%. Instead, its share increased as others with wonderful brand names started increasing the number of electric vehicles in their companies. So that was a big wake up. In the United States, I think Tesla, through the third quarter at least, was still 80% of all electric vehicles sold in the United States. So pretty stunning. The second thing that has happened is autonomous. The probability that Tesla gets autonomous right, we believe has increased from the 30% that we had in our base case in our last model. What's interesting about autonomous is the margins in autonomous, the gross margins are in the 80% range. The margins for electric vehicles alone are in the 25 to 30% range. This is a 5-year projection. So the model changes completely if Tesla gets autonomous right. And we think it will.
Okay. Now, as I said earlier, look, ARK came back even stronger after the big pandemic shock, but we seem to be in a totally different environment right now. Right now, this seems to be happening because of rising yields. How do you come back even stronger this time?
Oh, well, truth wins out. We know that our focus on disruptive innovation is going to be very productive. We're focused on 5 platforms involving 14 technologies, all of which are moving into exponential growth trajectories. And beyond that, many of these technologies are converging. So autonomous taxi networks are comprised of 3 technologies or 3 platforms: robotics, autonomous vehicles are robots. Electric, they will be electric. Electric is going to be the cheapest way to go. And artificial intelligence, they will be powered by artificial intelligence. Now, those are 3 S-curves coming together, and we think they're going to cause explosive and highly profitable growth. And I don't think most research departments are set up to focus on innovation this way. They're very siloed, specialized. We're focused on platforms. They're focused on sectors. And we're focused on the 14 different technologies associated with those platforms. These S-curves are going to collide and create so much positive energy that we think analysts, traditional analysts especially, are going to be gobsmacked, shall I say, by how powerful these are going to be. Yeah.
I'm curious, Cathie, what's your relationship with Elon Musk? How much contact do you have with him? What kind of conversations have you had? Any fun and crazy stories?
No, we did our podcast. Actually, the way we do our research is we will speak with IR. We don't want any special treatment, but we have a 5-year time horizon. And so we are really asking more technology questions than anything about the short term. So you can see from the podcast, I think March of 19, as the stock was cascading downward, we had a fantastic, Tasha Keeney and I had a fantastic podcast with Elon. And that podcast is evergreen because, again, we're talking about long-term time horizons. So you'll see how brilliant he is and how focused he is on Tesla. And we did talk about the crypto decision, the decision to shift some cash into crypto. Certainly, we were fully supportive of that. Any company on the right side of change should do diversify in that way.
Okay, but should he keep diversifying, or is $1.5 billion enough for you?
I'll leave that to their judgment. We of course, and I know they believe they should keep enough cash on their balance sheet to support their operations. And I think with the focus on their cash, that they are not going to do anything wild and crazy here.
All right, Cathie, we're going to take a quick commercial break. Cathie Wood, ARK Invest founder, CEO and CIO. Lots more to come with Cathie Wood as this sell-off continues with not just Tesla, but Square and Roku all taking a hit. Cathie Wood will be back with us next. This is Bloomberg. The tech sell-off continuing with Tesla, Square, Roku all taking a hit. Those three are the largest holdings in ARK ETFs. Tesla, though, down over 30% this month, but Cathie Wood says she is not concerned. She is still with us now. Cathie Wood, founder, CEO, and CIO of ARK Investment Management. You know, Cathie, you've been coming on this show for years, and in that time, your popularity has exploded. You've got your own line of ARK merchandise. The media loves talking to you and talking about you. They've called you the anti-Warren Buffett. How do you feel about not being just an investor, but a celebrity investor?
I don't think of myself that way. I think of myself, sitting down every day with our analysts and being really excited about the way the world's going to work and really just wanting to share that with people, from an educational point of view, just help people understand how radically the world's going to change and how it is so important to get on the right side of change. And I'm not just talking about portfolios here. I'm talking about parents and grandparents guiding their children and grandchildren to the right side of change. That's how radically we think the world is going to transform. So when we go through a rotation in the market like this, as I mentioned before, I think the bull market's broadening out. That's great, but be careful. This rotation into value, make sure you understand whether these companies are primed to move into this new world, or if they're going to be disrupted. And, we do think energy and financial services, which are the two best performing groups this year. So I think it's 37% and 15%, something like that. We think they are going to be some of the most disrupted sectors of all, given electric vehicles, autonomous electric vehicles, and digital wallets. So I work just really charged up, saying, "Hey, it's a beautiful day. Let's share the news. Let's share the good news."
Now, do you ever worry the rising retail interest in your funds could have negative consequences given how quickly and powerfully we've seen retail investors move the market in the last few weeks?
You know, I did a YouTube video. We're starting to do them regularly now that the markets are unsettled. And in the last one, I depicted the difference between institutional and retail investors today. We are much more embraced by the retail investor. The retail investor has seen the future really before institutional investors, because post tech and telecom crash and post 08-09 meltdown, institutions have been forced to track their benchmarks more closely, or they've chosen to. We think that's longer term a losing proposition. It's very backward looking. So we have found some of our strongest holders to be retail investors, because they really are keeping their eye on the prize. They know the world is changing. They're part of making the change. So we are having redemptions, but we are surprised at how low our redemptions have been.
You haven't traditionally seen outflows like you've seen over the last few days and weeks. How loyal do you think your investors are? How sticky is your model?
I think if they're paying attention to our research, if they're reading it, if they're listening, we're going to have a market update tomorrow. We open that to everyone. If they ask us questions and understand the depth of our research and the depth of our conviction in our research, they learn that, they want to keep their eye on the prize as well. So, what do you do during a period like this? Well, you buy low and maybe you take profit, sell high, but not sell out, trade around positions. And that's what we're seeing them do. And I think that's been healthy. But frankly, as you will see in our holdings at the end of every day in our trades, we are averaging in. We're using this period to average into one of the most important or some of the most important companies of our lifetime.
It is International Women's Day, Cathie, and I know your team is very diverse, including many women. Curious if you think that's part of your secret. Are you hiring? And if you're hiring, who? What are you looking for?
Oh, I do think, I think a diverse points of view, I think, are critical. And yes, so I think, yes, that has helped us without a doubt. And yes, we're hiring, we're looking for another Asian innovation analyst and perhaps another next generation internet analyst. So yes, we are hiring, and we have to fill in as well management positions, to get the operations to scale the way we would like them to scale. So absolutely, we're excited about the talent that is self-selecting. I've been thrilled. I wish more women would self-select. I have to tell you that. That's been my big surprise, is in the early days, women self-selected into ARC all the time. And now that we've hit our stride, I'm seeing fewer women. So I'm going to put that call out there today and say, we'd love to interview more women, those who are interested in innovation and really understand, because they have domain expertise, either from school or industry, really understand and are excited about the way the world's going to work.
Now, given all of these new investors who are coming into the market, companies like Robinhood making it easier than ever to trade, with the increased retail attention, do you ever have any concern that there are all these sort of shiny new objects competing for retail attention, that could compete with ARC? And how long do you think this correction will last?
Well, I think on the first topic, I don't think anyone's doing the kind of research we are. And that is what buttresses the firm and the portfolios. So I'm not really worried. I'm glad that there's more capital moving into innovation. It may not be as disciplined as ours is around rights law and building models, 5-6 years worth of models here. But I do think allocating capital towards innovation is the right thing to do. There is so much innovation taking place out there. And to keep the US in particular, or the developed world, competitive, we must invest in innovation. And for another reason, how are we going to get out of the mess that the coronavirus crisis put us in? Many people would say tax, cut spending. Our point of view is we really, with the exponential growth opportunities ahead of us, we could grow out of a lot of our problems. So, and I also think that our social media, social marketing, and some social distribution strategies are also giving us a competitive advantage. Most of the marketing and media around our research. So that in terms of the market, how long will this correction evolve? Let's put it this way. We believe we're in a V-shaped recovery. We believe earnings growth is going to be pretty explosive here. We believe that value and growth will do very well. Of course, value has been more depressed. We understand that rotation, but we also know there are minefields out there in value. So I think earnings are going to take out of this, and with each quarterly earnings report, we'll have more reasons to buy this market.
Cathie Wood, good to have you back here on Bloomberg Technology, ARK Invest founder, CEO, CIO. We will keep on watching you. All right, coming up, we are just moments away from speaking to FCC acting chairwoman Jessica Rosenworcel. We're going to talk about the massive Microsoft hack, the future of 5G, and more. This is Bloomberg. An attack on Microsoft's widely used business email software is morphing into a global cybersecurity crisis. The company says the attack started with a Chinese government-backed hacking group, and the number of victims has already hit 60,000, according to a senior U.S. official with knowledge of the investigation. The White House is warning companies to take the threat very seriously. We're going to ask FCC acting chairwoman Jessica Rosenworcel for her reaction to that, as well as how she plans to shape the commission going forward. Jessica Rosenworcel with us next. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. Newly discovered flaws in Microsoft software for email have raised concerns at the highest levels of the U.S. government. At least 60 organizations globally, many appear to be small and medium-sized businesses, have been hacked via holes in the company's email software in the last few days by suspected Chinese attackers. This hack coming just a few months after the SolarWinds breaches by suspected Russian cyber attackers. Joining us now, FCC Acting Chair Jessica Rosenworcel. Jessica, thank you so much for joining us. So look, I know that cyber isn't square in your purview, but cyber attacks are on the rise. You closely follow technology, and I'm curious how you're watching this unfold and if there's anything the FCC might take on to ensure our networks are more secure and resilient.
Well, thank you for having me. Cybersecurity is really an important part of our national and economic security, and the risks we face are only growing. I think government from the FCC on up is going to have to work more closely with private industry to make sure that we have the tools to address these challenges, because they're not going away. And today's news is just a demonstration of that.
Now, how will the Biden administration start a new chapter for the FCC? What will change?
Well, I think what's changed a lot in Washington is the recognition that broadband is no longer nice to have. It's need to have for everyone, everywhere. And, you know, this pandemic has demonstrated that with painful clarity, because we've all been told, go home, you know, work if you can online, go to school online, you know, have your doctor's appointments online. And so nobody's got a fair shot in this country if they don't have internet access at home. We've got to figure out how to make sure that access gets to every household and every person, no matter who they are or where they live.
Now, the ruling on net neutrality was perhaps the most controversial ruling out of the FCC under President Trump. And I'm curious, you're on the record opposing the net neutrality rollback. Would you propose the FCC reimpose net neutrality?
So you're absolutely right. I support net neutrality, and I opposed the last administration's rollback of our net neutrality rules. So here there's a short term and a long term. And in the short term, the news is actually out of California. Because in 2017, when the FCC stepped out of net neutrality, states stepped in like California. And just 2 weeks ago, a judge in California said that California's own net neutrality policies can now go into effect. So that's big news. But in the long term, we're going to need a national policy on this issue. And it's something that I intend to work with at the FCC and also with our folks in Congress, because I think, once again, net neutrality should be the law of the land.
Now I'm still at home. I believe you might still be at home, so
yes,
it's a good time to check in on. Thank you for having me. It's a good time to check in on America's broadband policy and what you're doing to close the digital divide. You know, at this point, we've got kids across the country who've been home for a year. What's it going to be like as we all start to come back online? And how concerned are you about the folks who may have been left behind?
Yeah, we have a digitally disconnected population in this country. So I'm really proud of something that the FCC did about a week ago. We put in place something called the Emergency Broadband Benefit. It's really historic. It's our nation's largest effort at broadband affordability in our history. We set aside $3.2 billion. Congress helped us do that to make sure that low-income households could get online. The support is $50 a month for those households. So people who've experienced job loss, who've applied for unemployment insurance, or who are on Medicaid or have Pell Grants are all eligible. And it's a way to make sure that households don't lose access to the world online during this crisis. And I think it's really important that we build programs like this, because we don't solve our nation's digital divide without having programs that address affordability. And this emergency broadband benefit is a really big one. I'm really proud of the effort we've made at the FCC, and I expect it will be available in a few short weeks.
So if confirmed, you'd be the first woman to permanently lead the FCC. We are all watching your future very closely. Is there any steer you can give us? What kind of conversations have you had with the White House? Are you going to be the chair of the FCC?
Well, you know, that's above my pay grade, but I am doing my best right now. It is a privilege and honor to lead the Federal Communications Commission, and, you know, communications technology is keeping us all connected in this crisis. It's really important.
So, look, you know, there are a lot of women, a lot of young girls out there who may, you know, there's concerns about backsliding, there's concerns about being left behind in this pandemic, especially if they didn't have that digital access. How much of a priority will that be for you?
Well, I think we got to figure out how to get everyone online everywhere. And we've got to start using every tool we have in Washington to make it happen. That's something I'm working on at the FCC. And I'm especially aware that there are students who fall into this homework gap, who have internet access at home, but are locked out of the virtual classroom. And the good news is Congress is right now looking at legislation to help with that problem too. So I think we've got a lot of progress that we're going to see in the next few months, and I'm really excited to be leading it.
So speaking of progress, the FCC ruled that SpaceX is eligible for subsidies for supplying rural broadband service from its fleet of satellites. These satellites are now already aloft. I'm curious if you think this is a good use of public subsidy, and when the FCC will complete this review of whether funding SpaceX and other, you know, some of these proposed recipients is an appropriate use of funding.
Yeah, so these are preliminary decisions that that we're taking a look at now. But I think, the bigger point here is that we need to start addressing these issues of the disconnected using new technologies. If, it had always been that we only reached people with fiber facilities in the ground, I think we have to be open to new technologies like fixed wireless and low Earth orbiting satellites, because some of those new technologies coming on board can deliver really high speeds at lower latencies than in the past. And I think we can get a lot of people more connected in rural areas a lot faster if we open ourselves to some of those opportunities like the one you described.
All right. At the moment, the commission is 2-2, Democrats versus Republicans. I know you're working on, we talked about broadband, working on 5G. What will you be able to accomplish with a Democratic majority?
Well, on the 5G front, I don't think that this issue is especially partisan. A good 5G plan involves both spectrum and security. And I am working really hard with my colleagues to bring more mid-band spectrum to market so carriers have the airwaves they need to deploy. And then we're also working really hard to make sure that our nation's networks don't have vulnerable foreign equipment in them that could open us up to surveillance problems. So we are working on spectrum and security, and it's my hope that we can make progress on both in the short term, regardless of the composition of the agency.
All right. FCC Acting Chair Jessica Rosel will keep watching to see about that permanent slot. Thank you so much for joining us. All right, coming up, Google launches a new challenge with prizes worth $25 million to tackle gender inequity around the world. We're going to speak to Google.org President Jacqueline Fuller about their latest efforts to empower women economically. Next, this is Bloomberg. Google.org, the charitable arm of the search giant, is committing $25 million to support global nonprofits and social organizations that are creating programs to advance economic empowerment for women and girls. The winners of the Impact Challenge will receive grants and mentorship from Google. This as President Biden creates a gender policy council within the White House, all part of the emphasis on shifting trends in work and empowerment, and part of our work shifting conversation today. Joining us now, Jacqueline Fuller, President at Google.org. Jacqueline, thank you so much for joining us. So talk to us more about the challenge and what is in it for the winners.
Absolutely. I have been at Google for more than a decade, leading Google.org, and I am so excited about this. It's my favorite thing that we've done. It's an open call, the Google.org Impact Challenge for Women and Girls, and we're going to provide $25 million plus expertise from our Googlers, and this is for nonprofits and social enterprises globally. And we're looking at a focus on creating pathways to prosperity for women and girls, so really around economic empowerment for women and girls. And it's open now on our site. That's g.co/Women and Girls Challenge. And the deadline is April 9th. Criteria-wise, we're really looking for innovation. So we want really bold ideas. And we want to make sure that the teams have, strong capacity, locally represented, and ideas that can scale and have some evidence of impact.
Now, President Biden just created this Gender Policy Council at the White House. What's your reaction to that?
Hey, all is needed, right, in this moment for women and girls. I mean, as you know so well, we have been making such amazing progress for women and girls in education and jobs, but the COVID crisis has really set us back. We have seen women be disproportionately impacted, and that's true globally. They're more than twice as likely to have lost their jobs as a result of COVID. Here in the US and around the world, we're seeing women needing to take on extra duties at home, whether that's teaching kids or taking care of their aging parents. In fact, we're seeing about 10 to 15 hours more work per week that women are spending on caregiving. And Children have had to leave school globally. We know that that's happening around the world, particularly in the global south. But the estimates are that 20 million girls may not return to school after the pandemic. So this is a moment for all of us, government, civil society, companies, individuals, to really stand up and help women and girls along that economic pathway.
I'm glad you mentioned that, Jacqueline. I'm really concerned about women backsliding, especially losing some of the progress we've made, especially as I sit here listening to my kids shuffle around upstairs while I talk to you from my basement. What kind of policies do you think are necessary to get women back into the workforce, to make sure that we don't move backwards and only move forwards?
Well, look, here's something that's very positive is that we know that there are pragmatic solutions that actually work. So one of them is thinking about reskilling. So through the Grow with Google program that we are helping with, we are training more than 20 million people globally in digital skills. And we know that when people have access to these skills, they can help advance their career. So we're launching things like IT support certificates to help people who have never even touched a computer get into that rung of the ladder into tech careers. So the good news is there are solutions out there. But I think one of the things that we need to see as well, let me just speak to my world, philanthropy. We need to make sure that there's more philanthropy that's going specifically to support women and girls. Only like 1 to 2% right now of all philanthropy is tailored specifically to closing gaps and to solutions for women and girls. So we would need to get more dedicated philanthropic capital, which is often risk capital, early capital that can really help push innovation. And we also need to see more women who are in leadership and decision making, and frankly, deciding where that money is going in philanthropy. It's one of these fields where we see about 3/4 of the staff in philanthropy is female, but only about half of CEOs of philanthropies. And then if you look at the largest philanthropies with more than $1 billion in assets, it's only about 25% are led by women.
Thank you for pointing that out, Jacqueline. Really important statistics there, and I always like to lean back on the numbers. President of Google.org, Jacqueline Fuller. Jacqueline, thanks so much for stopping by. We will follow that challenge and how it plays out. All right, coming up, the self-driving revolution is upon us. That's according to Amazon-backed self-driving car company Zoox. I'll speak with the CEO, Aisha Evans, next. Zoox, the self-driving company that is backed by Amazon, has high hopes for the future of autonomous cars. The company made headlines when it announced their self-driving, all-electric taxi designed for dense cities and complex roadways. Amazon bought Zoox last summer in what was reported to be its largest investment yet in self-driving car technology. Joining me now, Zoox CEO, Aisha Evans. Aisha, thank you so much for joining us. So, it's been not quite a year since you sold to Amazon, and certainly a crazy and unprecedented year at that. What's it been like being under the Amazon umbrella over the last few months?
Well, first of all, thank you for having me. We really appreciate the opportunity. It's been great. It's been about 6 months or so, and our mission is intact. Obviously, it's nice to not be fundraising out there. We're also learning a lot from Amazon, so it's been really great.
So you've been building these autonomous shuttles. We just saw an image of it there. How many have you built? Are you testing them in the wild yet?
We have built a little bit, about a little over 10. And we are testing them in a private facility that behaves like public roads, and also on test tracks.
So what is the vision here?
The vision is really reimagining or reinventing personal transportation, making it cleaner, safer, and more enjoyable for everyone. It's important to note that our business model is that we don't sell you a vehicle, we sell you a ride. And we think that in dense urban environment, that makes a lot of sense. Yes, the technology, it's fully autonomous because you have an app and you say, I want to go from point A to point B. The vehicle shows up, sliding doors, you sit, buckle up, you have your little screen that has your temperature, your route, as well as your music, and then you arrive at your destination, and doors, well, unbuckle up first, and then step out, and then go pick up the new passengers. So we're constantly moving around, and when I'm not using it, somebody else is using it. So it's mobility on demand. It's just enabled by a fleet of fully electric and autonomous basically vehicle. And you don't have to worry about charging, maintenance, any of that. You just get the benefit of rides.
So how far away from this becoming a reality? When might we see you launch a commercial service?
Well, we are testing in San Francisco and in Las Vegas, so I think it's fair to assume that we will be in those cities. What we like to say, we don't have any special or specific announcements at this point in time, but it's not next year for sure, but it's also a lot sooner than people imagine. This is really an inflection point in transportation. It's the beginning of the wave, and it's something that's really going to change how cities are developed, how we move around, and it's going to unlock a lot of opportunities. And so not next year, but a lot sooner than people realize.
And will you be delivering my Amazon packages? I mean, what's going to be the relationship, or will there be a connection to Amazon itself when that service launches?
Well, the way we like to put it, as Morgan Stanley says, this is a multi-trillion-dollar opportunity, and people, moving people is the foundation for us. And we will concede that once we're good and safe in terms of moving people, and we know how to scale that, or we actually scale that, I think it's fair to assume that we can move packages. So first we'll move you, and then we'll move your packages a bit later.
All right. Well, it is International Women's Day, and you have been breaking barriers in a white, male-dominated industry for a long time now. I'm curious how important you think it is to have diverse perspectives in the room when you're building a company and a product as important as a self-driving car.
Oh, I think that, first of all, it's important in all industries. I mean, women do represent half the population, meaning half the customers, half the consumers. And so it's important. Diversity of thought and being inquisitive is one of the most important things. It makes the product better. We were just talking about this morning. When I arrived at the company, about a month or 6 weeks in, we were having a discussion about pick up and drop off. And, you know, at work, pandemic notwithstanding, I'm in jeans and what have you. But occasionally I like to go on the town like everybody else and put my high heels on for a dinner date or something. I certainly don't want to be walking too far on those high heel shoes. You know, the truth is they hurt, at least for me. And so just being in that room and having that conversation is key. And there are multiple examples. So if you want to be there and provide value to your customers, one cannot ignore half the population.
Amen to that. If you can shorten the amount of time I have to wear high heels, but give me a chance to put them on, I'm all for it. I'm curious how much time you have spent with Jeff Bezos and what kind of a leash, how long a leash he's giving you in terms of additional funding, like what could be coming up, coming down the pike. I mean, you are still an independently operated company. Could we see an IPO?
All right, so lots of questions in there. Look, we spent a reasonable amount of time with the leadership at Amazon. They've been very helpful. I don't know about a leash. That's not really the basis of our relationship. As you know, Amazon is one of the few US high-tech companies that has been able to create value via multiple multi-billion-dollar businesses that are both adjacent and orthogonal. They are bold, they are visionary. We're learning a lot from them. And so, needless to say, I'm enjoying not having to fundraise on the open market anymore. And we have the capital required to go forward.
All right, Aisha Evans, fascinating to hear about your progress. The CEO of Zoox, thank you so much for joining us. We will keep watching how it all unfolds on the road. I'll have my high heels in tow. And that does it for this edition of Bloomberg Technology on a very special International Women's Day and a programming note. We're gonna have a lot more conversations about race, gender, and diversity at our Bloomberg Equality Summit starting next week, March 16th. I will be speaking to Melinda Gates, co-chair of the Bill and Melinda Gates Foundation. As part of that event, we will be talking about the philanthropy that goes towards women and girls and some other very important topics, and as well as how women are faring in the pandemic in general. Excited for that one, and thanks for watching this special edition of Bloomberg Tech. This is Bloomberg.